And there are three people who are coming from three very, very different directions into PNG's economy. Clarence Hoot is the Managing Director of PNG's Investment Promotion Authority, which is the only agency for promoting foreign direct investment into the country, but is also the agency that registers all companies in the country and also houses the Intellectual Property Office. Welcome, Clarence. Zanie Theron is the Managing Partner of one of PNG's largest professional services practices. She's the one who's reading all the balance sheets and looking at all the audit reports. While Lars Mortensen is one of PNG's two licensed stockbrokers and is a close watcher of PNG's financial and capital markets. So welcome to you as well. Clarence, let's start from the position of what kind of foreign direct investment PNG is receiving into the country at the moment. I imagine that over the COVID period, as I think we discussed last year, PNG took quite a hit, as countries all over the world did. How are we doing as far as bouncing back from COVID and getting back to pre-COVID levels of foreign direct investment into the country?
Thank you, Andrew, and welcome everyone, and thank you so much for this opportunity. I had some figures, and taking the cue from the two presentations this morning, the scenario is no different to PNG. Given the hard hits that we got from COVID-19, it's exactly the same feeling that we received in PNG. So I'd like to take the audience through some statistics. So what I've done is I've picked up the 5 key sectors that are performing from the pre-COVID 2019, what happened in 2020, 2021, and what we're seeing in the first 6 months of 2022. And then also inform the audience where the source of investment is coming from in terms of interest. So in 2019, we had real estate as the number one investing sector, followed by construction, financial services, wholesale retail, and the mining and petroleum. Of those interests in 2019, the leading investment country was Australia, obviously, followed closely by China, Singapore, Malaysia, and the USA. In 2020, there was a shift. We had wholesale and retail come to the forefront as the top investing sector, followed by mining and petroleum, construction on third, real estate, and the financial services on fifth. And by source of investment, this interest came from Malaysia as the first investing country, followed by Australia, China, Singapore, and the US. Moving on to 2021, and obviously I'll have a bit of explanation as to what we experienced over the 2 years. Moving on to 2021, we have mining and petroleum come to the top. As you know, sometime in 2021, government started re-engaging on the conversations with the Papua LNG, the Penang project, and that is witnessed by some interest coming in the mining and petroleum. So that was the number one interest sector in 2021, followed closely by wholesale, retail, real estate, construction, and the financial services. And by country of origin, we had Australia take the lead in that regard, followed by China, Malaysia, USA, and Singapore. What we've seen in 2022 is quite interesting. In the first 6 months of 2022, as of up to April, we have wholesale as the number one sector of interest, mining and petroleum, second, real estate, construction, and financial services. So from 2019 to 2022, in terms of investment priority sectors, we have real estate at the top, construction, wholesale, retail, financial, and mining and petroleum. But we are certainly looking forward to seeing a big jump in the mining and petroleum once the government progresses the conversations with the projects that are on stream. In 2020, in 2021 and in 2020 and 2022, there was a huge slump in terms of investment. Let me take you through, for instance, in the real estate sector. Total amount of interest was almost half a billion interest that we received. With the effects of COVID, and obviously some announcements by government which would have been detriment to the interest that we would have received in that regard. From half a billion, it dropped to almost 6 million a huge slump indeed in terms of foreign investment expressing interest to come into PNG. And then in 2021, it dropped further to it increased again to 21 million. In 2022, in the same sector, we're seeing an improvement. It's come up to 36 million in the first 4 to 6 months of the year. So again, what it's telling us is there's a positive picture. There's interest coming back in. Now that we have a good government, we're hoping for some very good policies and good messaging to be sent across to the foreign investment companies out there. So overall, in terms of investment destination or source of investments, consolidating the last 3 years and the first 6 months of this year, we're seeing Australia as the #1 investing country, followed closely by Malaysia, China, Singapore, and of course the US. That's just to, as I said earlier, to take the cue from this morning's presentations, and given the effects of what has transpired as a result of COVID, and of course our own challenges within the country.
Clarence, one of the things that the IPA also records, as well as new direct investment, is changes to investment. So, for example, a company has to change their registration if they're going into a new sector. What are you finding any changes to existing investors, but maybe moving into different areas of the economy?
Yeah, so Andrew, thank you very much. And again, as I said earlier, I was going to take you through what transpired in 2020 and 2021. So with the effects of COVID and the complete shutdown of the global travel and all that, not a single new investment came in.
Not one? In
2020 and 2021, not one. So we still saw some figures, for instance, not in the triple figures, but in the double figures, 20, 30 million investments still being recorded. And these are figures that come from the variations.
Right.
And variations is that this is the change of investment figures by foreign investment already in the country. And there's a process that they call variation. If a foreign investment tries to expand into a new area or expand to another location, they must notify the IPA through the variation process. So we witnessed a change happening. The trend was that there was some movement within FDI that was already in country, and that meant moving into other provinces as well as expanding into new sectors. I took a trip up to Hagen to talk to the business community there and visit my small office in Hagen, and I was amazed to see a good number of Moresby-based businesses had opened up doors at the Tinninga shopping area. You had the Phone House, the PIH, all the stuff. So when I saw that, it sort of reconfirmed that, so this is the trend that we're seeing in our records is actually what is happening.
Mm-hmm. Clarence, I want to come back to you in a moment to talk about maybe some of the government's planned reforms under the IPA Act and so on. But Zanie, maybe we could turn to you first of all. As far as the state of corporate business in Papua New Guinea, what are you seeing when you look at the balance sheets of company? Are they how did they manage to trade through the last 2 years, and how is their balance sheets looking now that we're coming out of the COVID period?
Thanks, Andrew. It's an interesting question because when COVID started really in PNG, which was about a year after Australia, we had identified certain sectors for flagging, and that would be our higher risk profile clients, such as aviation, hospitality, and certain manufacturing sectors. What we did find, though, was surprising in that they did manage to trade through it. The balance sheets had slightly declined. We did not see any significant new borrowings entered into with the banks, perhaps because the banks were also reluctant to increase the borrowings during those times. Of our entire client portfolio, if you look at aspects such as going concern indicators, we had flagged that as a risk for all our clients, and there were probably two where we had to take a closer look and that got emphasis of matter in their audit opinions based on going concern factors. But generally, what we can see now for this year, because we just finalized all the December 2021 audits, our clients had been profitable.
Yep.
And especially in the financial services sector, also in the vehicle sale sector, which brings with multinationals that are very profitable for the last financial year find themselves having to invest further into the country due to repatriation of funds, challenges that they're experiencing. But I guess, in short, the answer to your question is the clients that we have traded through it very successfully, and in fact, for some of them have been their best 2 years.
Wow. So Lars, is that the experience you've said? You follow the capital markets obviously very closely in the stock exchange. Is what Zanie's saying about how companies have traded through the period reflected in, say, for example, the stock market in PNG at the moment?
I think as a general proposition, the stock markets performed quite strongly. There was a lot of uncertainty in the early stages of COVID. Some of the large companies listed on the exchange were in the financial services sector. There was significant uncertainty around the levels of provisioning that they were going to be requiring for a deterioration in the performance of their businesses. So there was over-provisioning in the financial services sector, which made 2020 look very bad from a financial perspective. The resources sector looked bad because, if you recall, the initial impact of COVID was to result in significant drops in oil prices, for example. In 2021, we found that in the financial services industry, the provisioning that was a bit excessive in relation to 2020 was then written back in 2021 as we all got a better handle on how COVID was impacting on the economy. And that probably meant that we like to say that 2021 figures in the financial services sector are a bit stronger than reality. So really we look at 2020 and 2021 as a fair picture on what happened as an aggregate.
If you merge the two together.
Yeah, if you look at the two over the 2 years, you probably get a fair picture of how they traded, and that's very strongly. In the resources sector, there was a snapback in particular in petroleum prices, which then impacted on listed companies like at the time Oil Search and now Santos and so forth. So we've seen a strong performance in the market. It's a small market. There's a select small number of stocks listed, but it does give you a good picture of how those types of businesses have been operating. Even some of the smaller ones that are more traditional trading businesses, like City Pharmacy, like Agmark, they've also performed strongly, reported profitability, and we're very pleased to see that they have taken to heart the advice from everyone that you need to get a good track record of paying dividends in order for the market to attract new investors. So we've seen strong dividend flows to investors as well.
That sounds promising. Before, Justin Smirk was mentioning the amount of kina that's swashing around in the economy due to the foreign exchange situation, where it's hard to get kina out of the country, and so it's being redeployed locally. Are you seeing that in the capital markets too?
We are, but we see it in a sense, we're at the coalface of what Mr. Smirk was talking about in terms of excess liquidity in fixed interest markets.
Yes.
There is, some of the attendees might be surprised, but there is a surprisingly robust secondary market in fixed interest securities in PNG. And we've been sort of riding that wave of the interest rate wave, which went very strongly downwards in the early parts of this year, partly or mainly because of such excess liquidity in the system. That has started to reverse itself a little bit in the last few weeks, maybe last month, but certainly we see it very strongly that there's a disconnect between what you think is happening in inflation, what you think is happening in central bank interest rate policies, and what's happening in the fixed interest capital markets. Which is treasury bills, government inscribed stock. There's been a real disconnect in those markets.
That's interesting. I want to get onto the subject of changes to the way that certain parts of the economy are regulated and governed. And maybe, Clarence, we can start with the IPA Act. I think we were talking back in at the end of the last session of Parliament, of the 10th Parliament, which of course is now finished, and you were saying just managed to miss getting the IPA Act tabled in front of Parliament for the last session. That's quite a significant document as far as changing the regulatory environment for investment. Can you take us through what the changes are, first of all, and then also maybe the prospects of when you think those changes might be implemented by the government?
Yes, again, thank you, Andrew. So, as the audience might be aware, we started this process back in 2019 when the subject of promoting SMEs became government priority. So we did a review then, and we managed to complete all the exercises, and we just couldn't get a consensus amongst our leaders. However, last year we managed to get it across the board through the government bureaucratic process. Got into cabinet and just missed the last parliament session. But we are comforted by the fact that according to the Secretary for Attorney General, the process is now much simpler. I just need to take it back to cabinet to get cabinet blessing and then push it across to Parliament to be presented. Some of the changes that are included in the amendments to the Investment Promotion Act include, obviously, firstly, the introduction of a registrar for foreign direct investment. As you're aware, we currently have a registrar of companies that takes charge of all business formalization in PNG. By having a foreign direct investment registrar, her main role will be basically to manage the reserved activities list, which I'm also happy to announce that was passed by Parliament towards the end of last year. And we're working towards carrying out a awareness, just pending the amendments to go through Parliament.
So, Clarence, this is a list of economic activities that are reserved for local businesses.
That is correct.
Yeah.
The second, and that's the second one, the revision of the reserved activities list. Other changes are basically in line with getting our laws updated to address issues of anti-money laundering and counter-terrorism financing. As you know, we were grey listed when they did the last peer review, and the government has been charged with taking on this responsibility, which is led by the Central Bank and Attorney General, and we play an active role in that, and this legislation addresses part of that as well as simplifying the current online registry system that you all use by getting some of the changes enacted through those changes. We hope to make the system more user-friendly and allow you to do more. Things like, for instance, digging out data on the number of registrations, digging out data on where businesses are located, which province is the best performing province, and the data that I just gave you. This will all be available to the public at, of course, a minimal fee. I've got to look after the system, pay for it somehow. So all those features will be coming on board when we launch the new system, hopefully by the end of this year. Those are some of the main things that we're looking at in the revised law.
Yeah, Zanie, to follow on the conversation about reforms, I know there's been some suggested changes to the tax system. As far as your clients are concerned, what changes or what reforms are the ones that are occupying people, that are keeping them awake at night or maybe making them concerned?
Well, firstly, I'm not a tax expert, but looking at the changes to the tax regime or implementation of new guideline rules is to do with a change around the management fee, withholding taxes, and what that means to companies.
Could you just give a quick summary what they're proposing? Yeah.
In terms of my understanding is that the deductibility of those management fees and has become in question.
Right.
For those countries that PNG has got tax arrangements with the double tax agreements with, and this concerns a lot of those countries, especially Australian companies. So they're all looking at probably how they need to treat their management fees, what it does mean for their withholding taxes. They are seeking a lot of advice in that regard. We've also discussed this to some extent in our monthly newsletters. And as I said, I'm no tax expert, but in terms of an area to look at, that would certainly be one in the world of tax. In the world of statutory compliance, I would say we would welcome any reforms, because for us the governance aspect of our clients and the statutory compliance aspect of our clients is of highest importance. And we have seen generally with the companies that are not multinationals that it hasn't been at the top of their agenda in all cases. So because that is a major part of what we do, and especially because the IPA is looking at the technological advances that can be done there, we would be looking at what that means with clients, with how much they can do online, how much we can do in terms of their own systems, our own systems that we need to change for them. So those are all welcome changes in terms of the IPA, the companies, and so forth. What we would like to see as a profession, though, is probably a more robust inspection by the IPA, the registrar of the companies, quality of their filings, the quality of the financial statements, and that it becomes more than a compliance exercise or tick the box exercise, but actually have the manpower and the expertise to review those financials, comment on those financials, and challenge companies that have multiple years of, say, audit qualifications or non-compliant financial statements, because they're all meant to report in terms of IFRS. It doesn't happen, and because they know that the IPA does not necessarily have the manpower or the funds to do that, that is something that the accounting profession would like to see happening in terms of reform.
Lars, the capital markets in PNG traditionally have been quite vanilla as far as what you can do with them, what you can buy and what you can sell, and based around the stock exchange and government stocks. What are the prospects for broadening that, or making that a more interesting and a more sophisticated market to enable more investment maybe to be generated?
I think there's a couple of areas where the sector is looking for, I guess, some government action. I think it's very important that we finish the work that was started with the Capital Markets Act, specifically that we get the regulations to that act in place so that the market has its sort of complete architecture. So that will be that's all participants, the PNGX, JMP Securities, Kina Securities, and all investors. That's important to us. And there's no real reason why it hasn't been done other than competing priorities. That will then allow us to operate the market more efficiently and more broadly and give greater certainty. The area that hamstrings us a little bit in terms of adding new product types is probably tax. There's some real tax inefficiencies in terms of, for example, unitized investments. So if you look at the Income Tax Act, and I'm also not a tax expert, but it's essentially the way the Act contemplates unitized investments is very much looking at from a private investment perspective rather than an exchange-traded environment. So we can't effectively from a tax perspective offer real estate investment trusts. We struggle to do what we call ETFs, exchange-traded funds, which would allow us to create products that give a wider exposure to smaller investors, to a diversified portfolio, because it becomes very quickly very tax problematic and inefficient. So a bit of tax, finish the work on the Capital Markets Act by putting in place the regulations. Then you will see, I believe, real estate investment trust. You will see exchange-traded funds. You might see unitized investments, so exchange-traded unit trusts dealing with providing Papua New Guineans with access to international markets. There's all sorts of products being developed, but they typically run into some difficulties to do with tax. the regulations, and at the final backstop, if you're talking about international investments for Papua New Guineans on the PNGX, you're running into difficulties in terms of foreign exchange and so forth. But leave the foreign exchange for now, focus on the regulations to the Act, and let's focus on some tax matters.
Right. So, Clarence, let's get in the area of incentives. There's compliance and regulations, but obviously most countries now, in order to compete for foreign direct investment, have to put the best foot forward and put together a picture of what the attractiveness of investing in a country is. What would you say are the major, I don't want to go through a whole list of all the incentives because they are quite plentiful, but what do you think are the key incentives that PNG is offering that is actually making a difference to the kind of investment you're attracting?
At the moment, let me be clear from the outset that the IPA is not really into formulating the incentives that are offered. These are more the fiscal fall in the space of Treasury, which is then implemented by IRC. But as a promotional agency, it's our role to appreciate what is available and promote this to investors in which they can use. So at the outset, I think there hasn't been any new incentives being offered to foreign direct investment, other than the accelerated depreciation, zero tax on input components, training incentives, accelerated depreciation I've mentioned. So really going forward, and we hope, or let me go one step back. In 2019, the IPA ran a regulator summit to try and see what are the hold-up to foreign investment and which areas can be improved on to entice more investment to come in. What we found out was a lot of work needed to be done on a collaborative arrangement between agencies to identify. The government gives us the priority sectors. We now need to work together because, for instance, forestry is responsible for forestry, fisheries, and so forth and so forth. So we need to come together to identify what opportunities there are and then devise appropriate incentives for each of those sectors. Because what's currently available is a generic across all sectors, across all economic sectors.
So, Zanie, from your point of view, what do you think would actually assist with actually improving investment? What sort of things could the government be doing as far as incentives are concerned?
I would say incentives that are outside of the tax realm would be around allowing incentives for local employment. I think in certain areas, if you look at Newcrest and Lihir, for instance, I think there's a guideline around 40% of all employees there have to be Lihirians. That would be an example. Would be definitely local employment. There are various tax incentives. I would say not to the extent of tax holidays as has happened in the past, but certainly in terms of construction, accelerated depreciation, which I think currently may be in place in any event. Any incentives broadly that relate to the investment in the country from the societal perspective, right. Without it being a pure community service, would be a positive and an incentive to companies. And then a bit more controversial would be from the tax incentive. We're looking at the tax rate itself.
Right, the cutting tax.
Yes, yes, whether it is for new investors or generally. We're cutting tax for a period of time and not a general cutting tax because you are, say, an explorer or you are an individual company that has been given a 10 tax year holiday.
Are you getting any response to the government's proponents of special economic zones? We're going to hear from one later on today, but is that kind of vehicle attractive to companies like the client base you serve?
Yes, certainly it would be, and we've been advising the government in that regard too. But I would say certainly it would be. And what I found also particularly interesting is what probably is going to be discussed later is around the whole area of renewable energy and how that can be combined with that topic too.
Lars, I mentioned that the stock exchange is currently quite small, but there's suggestion that there's probably a next tier of companies that are sort of starting to plan to enter the share market in some way with a listing. What are the prospects of that happening, do you think, over the next 2 to 3 years?
I think they're quite strong. As you mentioned, there's market participants like ourselves have a watch list of companies that we consider there or thereabouts or getting there, and that we work with or stay in touch with to make sure they understand the opportunities and benefits, but also some of the costs associated with going down the route of going public. I'm very optimistic, and I keep saying this to people, that it's really on us as an industry now to convince these business owners that this is the next natural step. Now, to do that, we have to give them confidence that we can muster the investors, that we can proliferate the stock, sell it to the public, that the price is right, and that's on us in terms of the market, in terms of the market participants. But I can assure you that there is a healthy list of companies that are very close to what we think is IPO ready. Typically in PNG, you do need usually some strengthening of management capability. You need probably to manage the transition away from a powerful single owner in a lot of cases into a more corporatized structure. A lot of that work happens 18 months, 12 to 18 months before an IPO. And in a number of organizations, that work has now started. And we're optimistic that we can get there. What we do need on top of all of that is strong support from the institutional investor community.
Right. The super funds and so on. Yep.
Yes. So sometimes we will be below their investment thresholds and so forth, but the reality is, as a sector, a long-term, strong capital market requires that we all, in a sense, nobody sacrifices in terms of the quality of the investment, but we do all need to work together to make sure that we bring companies into the public sphere, because it'll be the only way Papua New Guineans will have an opportunity to have a diversified portfolio of their own. And I think that's something that a growing segment in the PNG population is really looking for.
I'm going to throw the session open to questions in a moment. So if you have a question, have a think, put up your hand and we'll bring the microphone to you if you want to ask it from the floor. But we'll probably give some priority to some of the questions that are already coming through on the app. But one final question, which I'm going to probably drag out quite a lot over the next couple of days, because I think it's one that does give a sense of what's on people's minds. We have a new government in place. And we have, as the High Commissioner has outlined, a whole raft of new policies and priorities, which the Prime Minister has already outlined in his opening address to Parliament. Maybe we'll start with you, Zanie, and then we'll work across the other two. What do you think the priorities for this new government should be as far as business is concerned?
Well, I did read the Prime Minister's inaugural speech. Yeah. And it's clear from that speech that there is going to be a great focus, other than the resource sector that everyone expects, on agriculture and SMEs. So from the perspective of providing services to the government and to those companies involved in those sectors, those will be our focus areas as well. And I also found it particularly pleasing that there's a message of stability that is intended to continue to attract the foreign investors. So financial services too, not so much from what came out of the government side, but from what we've seen, is that we see quite a number of applications of local entities in the financial services sector to apply to become commercial banks. And yes, I would say at least one, perhaps two, might come to fruition in the next 12 to 24 months.
So more competition in the banking sector would be welcomed by all parties, I'm sure.
Absolutely.
Clarence, any thoughts on priorities? You have to be careful, I guess.
Thank you, Andrew. And I was going to say that. Let me thank High Commissioner for summarizing the priorities as outlined by by the Prime Minister in his inaugural speech in this 11th House of Parliament. And also, I think one of the things that High Commissioner did not highlight is the fact that from the public service machinery, the Prime Minister is now imposing on the public service machinery to be delivery driven, and delivery driven in terms of having key KPIs that will be measured on the performance, and that the Prime Minister is saying that will also extend to the ministers. Mm-hmm. So there's got to be a very serious evaluation process over the KPIs, both from the bureaucratic heads of agencies and departments, as well as from the ministerial perspective. And for us to achieve that, I think we need to get some of the policy reforms and the legislative reforms through Parliament. And when it comes to implementation stage, clearly demarcate where politics stops and let the public service run the machinery, so we can see some real deliveries in terms of KPIs that are expected of the CEOs and departmental heads.
Mm-hmm. Mm. Lars?
Well, in terms of the capital markets and the companies that are either currently listed or planning on listing, I mean, there's a lot of things that the government can do at the micro level. Tax reforms, make things more efficient. The number one thing that will lift the prospects for listed companies and the prospect for more listings is to drive economic growth. Right. In the capital markets, there is an element of all boats rise, with the tide. And so therefore, the more effort the government puts into getting the right outcome, whatever that is, in terms of driving projects to fruition, driving investments in agriculture and in other sectors that drive economic growth, that in itself will be very supportive for the market. And I think that's really the number one thing. In terms of, I've outlined some of the sort of reforms for the domestic sector. If you think of it from the point of view of making the PNGX and the local debt markets investable for foreign investors, I have to be honest that it's a foreign exchange issue. I mean, the fact that you have differential pricing for the same, in Kina terms, for the same asset on the PNG ASX, and we're not talking small differences that you need a computerized trading platform to take advantage of. We're talking significant pricing deltas. That fact tells you that international investors aren't able to move from one market to the next to make sure that there's pricing efficiency, and that tells you that foreign exchange will stop us from attracting serious portfolio investment into the domestic market. Because foreign investors will think exclusively in foreign currency returns. But again, that's a vexed issue, and there are all sorts of elements to that. But certainly that's the main driver for getting international portfolio investment in.
Okay. Got time for a couple of quick questions before we go to our next session. This question from Tess Newton-Kane. A major challenge for businesses and investors in PNG is getting payments for government contracts. Maybe you could deal with this. What can we hope for, expect from the new government on this? How is the situation improving? Because there was quite a substantial amount of arrears, certainly last year, presented by the Treasurer at the national budget level.
Yes, so we have personal experience of that. And it is not necessarily that an improvement was seen, it is that the suppliers have changed the way the payment terms work with government. Mm. So what has been introduced is many more upfront payments. We do know that the Business Council and the Port Moresby Chamber, they went through an exercise of having all companies submit the amounts that they have been owed. Mm-hmm. From government, and that was consolidated and presented to government. And from memory, and Rio would know about this more, I think it came to a 3 billion kina in arrears. And at one point there was a plan to start addressing those arrears. Mm. To what extent it's been implemented is unknown to me. Most of these arrear payments have not been settled. Right. As far as I know, and companies have to individually appeal to government. There's also a regulation that if you haven't implemented proceedings against the government within 6 months of the debt falling due, that it's expired.
We're hoping it just goes away.
Yes.
That would be a nice way to deal with your household expenses, wouldn't it?
There's also another regulation around if it hadn't been paid within 5 years that it doesn't need
Right.
to be paid. But companies have successfully navigated around that. So I think it still does remain an issue. I'm not sure that it has been budgeted for the next financial year, given the size and the significance of it. So any improvements that have been seen was around the payment terms has been changed.
Right. Just a quick one for you, Clarence. What do you know about trends in domestic investment, and particularly joint ventures or PNG companies who are partnering with international companies?
For the joint venture arrangements, that will be usually captured in the figures that I that I mentioned. However, we are encouraged by seeing some of the companies going into implementing the local content. And in here, I mean, we're seeing some of the local companies partnering with international partners to going into logistical space. For instance, I had a quick meeting with Trans Wonderland a week before, and they've got some grand plans going ahead in preparation for what's supposedly online. So that's captured in the figures that I gave. I want to draw the attention to the SME space. What we've seen over the last 2 years, over 3 years, since the government intervened with the 200 million kina seed capital funding, what we saw in the registry figures is a huge increase in terms of business names and local, small local company registration numbers.
This is basically government funding of loans, cheap loans to small business.
Basically, because one of the requirements is that you have to be formalized with IPA, you have to be registered with IPA, and the BSP and National Development Bank will be asking for your registration certificate. So that sort of tempted everyone to come and register. So we saw a huge climb in the numbers of registrations at that time, and it's still continuing.